Hello folks, LA Little here, TA Today, and today I want to take a quick look at this basic idea that's part of Neoclassical, and that's there's only two types of trades. Just two. You either got a breakout or a retrace. Everything else is a derivative of those two things. Once you realize that, it really changes the way you look at charts. When you get a breakout, almost all the time it's going to come back for a retrace. And so it changes the way you want to approach buying and selling. I want to go through two examples. I'm going to go through AVGO, which I did last Friday. I gave you as a trade. And I want to go through the S&P 500 using the SPX cash and show you what the retrace, retest, regen really looks like. So let's take a look at the charts here. Starting with the AVGO, of course, you know, long term this thing is like crazy good here. This is your breakout, right? Right here's your breakout. So you got a swing point high, it sets up, you test it, can't get over it. You come down, kind of test the bottom area, and then boom, you break out right there. Now Friday was over here, the 5th, yeah, Friday was the 5th. And I'd given you this trade on Friday saying, you know, this thing was set to try and run right back to the top. And that's what it did. And it just broke over it and has moved higher. Now, this never set up as a swing point high because you didn't get enough bars prior to the push. But it was a swing point high over here, broke out, right? Did a little retest. Let's look at the retest. Here's your top, 374.23. Here's your retest. That was what I was looking at last week on Friday when I said that it held and we were probably going to push higher. The key to me on Friday, and the reason I bought it on Friday at the end of the day, is that it closed over this swing point high. So that's the retest, regenerating higher, doing it over here as well. That's a sweet setup, folks. It's not extended here. It is extended there. As a matter of fact, you got earnings coming up tomorrow. And more than likely, this is going to pull back again tomorrow. Now, when it does, that sets up a little different trade. And that is that now, when it comes back, if it comes back tomorrow, maybe it skies, you know, higher. I don't know. We'll see. But if it does come back, it's going to come back into this area, right? And if it really, you know, did something terrible, it would come all the way down to here. But I don't expect that. So you got your gap here. You got the retest regen there. If it came back in here, it's probably a buy again. That's the way that one's still set up. You've got confirmed over here, suspect over here, suspect, all of them bullish, saying this thing wants to go higher still. Whether it does it immediately or you get a pullback before it does it, if you get the pullback, it's gravy. You just want to take it, buy and go with it. Let's go to the S&P 500 because it just regenerated today. So you had Fed day today. What you have happening here is the S&P, this is your swing point high. You got another one over here, right? That's the all-time high. It goes up, gets over it right on that bar, right? Comes back, test the very bottom of it this morning, and then boom, back the other way. That's the regen, right? You're either going to have a breakout or you're going to have a retest. That's the setup all the time, over and over and over. Just drill it into your heads because the sooner you do, the better, right? Because then you look at the chart differently. You don't buy it on this breakout. You wait for the regenerate, right? Let it come back in. You get some more information. Does volume go up? Does it come down? Well, if it comes down and the price is coming back and the volume that comes back is less than the volume that it broke out on, right, in this breakout, that's a good situation. That's saying fewer and fewer sellers on the way back. That's the sort of information that's beautiful to have. So you don't have to buy there. Besides, you get a bad entry, and then when you get down to here, you don't want to buy again. When you get down to here, you want to buy, right? It's that simple. You just wait, you buy it, right? If this thing long-term is bullish, intermediate term, bullish, right? Sideways here, or had been, right? You're waiting for the sideways to turn back bullish to match what's going on here. believe the trends out here. These longer term trends are the ones you have to believe, right? And then you use weakness in the interim to buy, whether it's the test down here, right? Whether it's the test on the retest here, whether it's the breakout of these retest regen bearish, like when you got over here, right? That destroyed both of those bearish retest regens. That's the buy. That's saying that worst case, it's no longer down, it's sideways and potentially up. And given that you have up over here, the potentially up is a good bet. I hope that helps you. Leave comments. Tell me what you want to see, right? I'll help you out. And until next time, have a great one.